Welcome to the Deep Dive, where we take stacks of information and really try to pull out the most important nuggets of knowledge and insight for you. Today, we're diving deep into a really fascinating report from Citi. It's called Real Time, 24 by 7 Finance in an Always-On World. And our mission here, our goal, is to unpack this accelerating shift towards real-time payments. We want to understand its massive global impact and explore both the incredible opportunities and, frankly, the pressing challenges it presents across finance, business, even your daily life.
It is pretty remarkable, isn't it, how much of our world already runs in real time. I mean, think about it. Hailing a ride, streaming a movie, ordering food. That expectation of instant gratification,
Yeah.
it's now fundamentally reshaping financial services.
Mm.
So yeah, we're going to dig into the data, look at the driving forces, and figure out what this all means for the future.
Yeah, that always-on expectation is it's undeniable.
Mm.
We've all gotten so used to instant information, immediate interactions. Whether it's sharing a live moment with friends overseas or just clicking a few buttons to buy something unique from an artisan halfway around the world. This immediacy is just baked in now.
Yeah.
But for financial services, I mean, they've historically run on these slower, batch-driven systems. What was the real tipping point that forced this shift?
That's a great question because it's not just about convenience, right? This thirst for instant service goes straight into finance. And the real magic, I think, of instant payments isn't just the speed. It's more about the accelerated economic flywheel effect. Take the gig economy, for instance. Giving workers immediate access to their wages, well, it doesn't just make them happier. That money instantly gets back into the system. It fuels consumption, boosts economic activity. It helps increase labor market participation and enables micro-entrepreneurship in ways that traditional delays just couldn't support.
Ah, okay. So it's not just about faster spending, it's actually rewiring economic cycles. And the report really emphasizes this is largely powered by what they call the mobile reflex. Our smartphones acting as these on-demand gateways to everything. Smartphone penetration is over 100% in many places now. People aren't just connected. They're potentially connected, often across multiple devices. So what kind of seismic shifts does this cause in the financial world? Well, when you look at the numbers, it's truly staggering. The financial services landscape isn't just changing, it feels fundamentally transformed. Real-time payments, they're not just emerging anymore, are they? They're becoming the default. Over 80 markets globally already have real-time payment systems. Get this, processing nearly 266 billion transactions in 2023 alone. That's a 42% increase year over year. And the projections, they show this volume soaring to 575 billion by 2028. It's incredible growth. Even SWIFT, the global messaging network we usually think of for slower cross-border stuff, even they're speeding up. 90% of their transactions now credit the beneficiary bank within an hour.
Right. And if we zoom out a bit, you see Asia and emerging markets have really been leading this charge. Their leapfrog adoption of mobile-first tech plus proactive government initiatives pushing digital financial inclusion, that's been critical. Look at India's Unified Payments Interface, UPI. It processed, what was it, an astonishing 118 billion real-time transactions in 2023.
118 billion.
Yeah, that's almost half of all global real-time payment volumes.
Wow.
And it's not just India. Brazil's PIX system now serves 75% of its population. And Kenya's M-Pesa, remember that, it helped lift financial inclusion from just 26% back in 2006, 85% in 2024. Huge impact.
Okay, 118 billion for UPI alone.
Yeah.
That's just an incredible success story. Here in the U.S., well, we've been a bit slower, haven't we? Instant payments were only, 1.5% of electronic payments in 2023, but the momentum's definitely picking up. The Fed launched its FedNow service in July 2023, and the clearinghouse's RTP network, that's been running since 2017. Plus, over in Europe, the EU instant payments regulation is mandating banks support instant euro transfers by 2025. That ensures full reachability.
And this shift brings a really profound challenge for traditional banks. As Dr. Ruth Wanhaver points out in the report, with speed becoming universal because of these regulations, well, it's just not a differentiator anymore.
Right.
So the core insight for banks is this. The new battleground isn't how fast you move the money. Everyone's going to be fast. It's about what innovative value you can layer on top of that instant transaction. Things like hyper-personalized services, maybe proactive fraud detection, or seamless integration into totally new business models. That's where the competition will be.
Okay, so this isn't just about faster money moving around. It's actually reshaping entire economies. The Center for Economic and Business Research, they estimate real-time payments could boost global GDP by $286 billion by 2028. That's significant economic uplift. Some emerging markets might even see a 1-2 percentage point increase in GDP growth. Nigeria, for example, could see a 6.4% GDP back. Thailand, 2.7%. Brazil, $50 billion. What's the mechanism there? How does that immediacy translate into such big growth numbers?
Well, it really boils down to efficiency and access. And this transformation, it has a profound social impact too, especially for financial inclusion. Real-time payments are projected to help something like 167 million previously unbanked individuals, especially women, youth, low-income people, open bank accounts by 2028.
167 million?
Yeah. It reduces their reliance on expensive credit or informal lending, lets them participate properly in the formal economy. And for governments, it means less cost handling cash, better tax compliance maybe. It's about unlocking all this dormant economic potential.
That's fascinating, how a technical shift can have such a direct human impact. And there's a powerful real-world example in the report from Mercado Pago in Latin America. Tomas Azali, their director, he highlights how instant payments are just strategically vital to their mission, which is democratizing access to financial services. They've seen millions of people, micro-entrepreneurs, women, using these tools to start or grow businesses. And that drives broader economic participation, community resilience. But what were the biggest hurdles they likely faced? Are those lessons transferable, do you think, or unique to their market?
Well, every market has its own quirks, for sure. But I think overcoming legacy systems and building trust, those are pretty universal challenges. And the report underscores, this shift isn't painless. The competitive pressure is really intensifying for traditional financial institutions. There's a survey showing nearly 9 in 10 consumers, 88% would actually abandon a transaction if they hit friction online.
Wow, 88%?
Yeah. But conversely, 93% of financial institutions offering instant payments see a positive impact on customer retention. So it tells you friction is a killer and speed builds loyalty.
So for the traditional banks, it's not just about trying to keep up. It sounds like it's about a complete reinvention.
Exactly. Banks need a full-scale transformation. It's way beyond just updating the payment rails. It means re-engineering those often outdated back-end systems for true 24/7 availability and developing real-time liquidity management strategies. As Stephen Randall from Citi knows, he's global head of liquidity management services. Their instant payments demand a fundamental shift in how liquidity is managed. But that also creates opportunities for much better efficiency. It's about managing capital, like down to the second.
And meanwhile, the fintechs are just charging ahead, aren't they? They're projected to gain about 10% market share in cross-border payments from banks in the next, 2 to 5 years. They don't have the burden of legacy systems, so they're creating really innovative products. Things like automatic bill splitting, instant merchant settlement, just-in-time payroll, all powered by real-time data for these super personalized experiences. How are corporates responding? What new opportunities does this open up for them?
For corporates, yeah, Ricardo Correa from Bain & Company explained it really clearly. Instant payments fundamentally reshape liquidity management and capital efficiency. Think about the potential to unlock what's estimated to be $1.5 trillion in trapped excess working capital globally, just sitting there because of payment delays.
$1.5 trillion.
Yeah. Imagine freeing that up for investment or paying down debt. And new business models are emerging too, like automated event-triggered insurance settlements, parametric insurance.
How does that work?
Basically, policies that pay out automatically when predefined conditions are met. Say, a hurricane hits a certain intensity in a specific area. The payout is triggered instantly. No lengthy claims process needed. Matt Cornwall of Chubb highlights this. It's all about data-driven, instant solutions.
That sounds incredibly efficient. But, with all this speed and convenience, it feels like there's a pretty significant shadow lurking: fraud. We're living in a world where financial fraud risk has just exploded. Estimated $1 trillion lost to scams globally this year, 2024. And nearly half of all consumers say they experience a scam attempt at least once a week. How does the real-time nature of these payments make them so vulnerable?
It really creates a perfect storm, doesn't it? The instantaneous nature and often the irreversibility of real-time transactions, it gives criminals a massive advantage. There's almost no window for traditional prevention methods to kick in. And what's particularly concerning now is how emerging tech, especially AI, is amplifying these risks. Fraudsters are using sophisticated AI, even deep fakes, to impersonate people, trick victims into authorizing payments.
Deepfakes. Like making a voice sound like someone you know.
Exactly. You might get a call that sounds exactly like your child in distress, needing money urgently. It's terrifyingly effective. It's becoming this rapidly escalating game of cat and mouse where essentially AI will need to fight AI.
So what specific challenges does that pose for financial institutions? Are we talking about a whole new level of vigilance needed?
Absolutely. It's not just about spotting known fraud patterns anymore. That's old news. Now it's about real-time behavioral analysis, complex anomaly detection, predictive modeling, all at a scale we've just never seen before. Banks, payment providers, they're having to invest massively in AI-powered security solutions, systems that can analyze billions of data points in milliseconds to spot suspicious activity before the transaction completes and the money disappears. The fight against fraud in this real-time world is just a constant, relentless race to innovate.
That's a huge challenge. But it also tells us there must be incredible technology powering this whole age of instant. What are the key tech upgrades making secure instant processing possible?
It really is a powerful combination of things coming together. You've got exponential increases in processing power, much wider global internet availability, cloud computing becoming mainstream, and of course the rollout of 5G. These aren't just small improvements, they are fundamental shifts. They allow for secure instant processing, and they enable instant payments to expand beyond just traditional banking channels, reaching everything from your smartwatch to potentially your car.
Okay, and what role did APIs play? I hear that term API thrown around a lot.
Right. APIs, application programming interfaces, they're absolutely essential. Think of them like universal connectors or translators between different systems. They let systems talk to each other in real time, sharing data securely. They automate complex workflows. They promote interoperability. So in finance, APIs are crucial for, say, instantly sharing data between banks for fraud detection, or for letting a third-party app initiate a payment from your bank account seamlessly. They're kind of the hidden plumbing making the whole instant economy flow smoothly.
Got it. And what about the Internet of Things, IoT? That feels like it takes the whole always-on idea to another level for payments.
It absolutely does. This Internet of Things isn't just about your smart fridge ordering milk, although that's part of it.
Right?
It's revolutionizing things like supply chains. Imagine real-time inventory management where components are ordered and paid for instantly the moment they're used on the factory floor. Or predictive maintenance systems that trigger a payment for repairs before a critical machine even breaks down. Christopher Schmitz and Daniel Moles from EY Parthenon, they explore how IoT is shifting revenue from traditional product sales to totally new models. Like, yeah, the printer automatically ordering and paying for its own toner. We're also seeing it in electric vehicles, integrated mobility platforms, subscription models for charging, or other services. There are still challenges, obviously, with charging infrastructure and costs, but the push towards these new customer-focused EV models is really clear.
Okay, let's just scale again to the global level. Cross-border payments. That's a massive market, right? Estimated to hit $300 trillion by 2030. The G20 has this big initiative, a roadmap to enhance cross-border payments, make them cheaper, faster, easier to access, more transparent. But how realistic are these goals? Moving money across borders seems inherently complex.
Oh, they're definitely ambitious goals, and for good reason. Significant hurdles absolutely remain. We've seen some high-profile initiatives run into trouble, like the Nordic P27 project that aimed to create a single real-time payment system across several Nordic countries. And immediate cross-border payments, or IXB, both face setbacks. And it just underscores the complexities involved, getting different systems to talk to each other, interoperability, aligning different national priorities, navigating tricky regulatory landscapes, even when the economies are closely aligned. It's not just a technical puzzle, it's very much a political and legal one, too.
Right. Despite those complexities, though, the opportunities for instant cross-border payments seem huge for transforming global business. I can easily imagine the impact on the global gig economy. Instant payroll for workers anywhere. Or streamlining passenger compensation when your flight gets delayed. What else is it revolutionizing internationally?
Well, it's unlocking liquidity in global trade, especially for small and medium-sized businesses that often struggle with cash flow because of those payment delays. And it's fundamentally changing corporate treasury operations, allowing treasurers to move funds across different subsidiaries around Railing's world in real time, optimizing their global cash flow almost instantly. And, this naturally raises an important question. What about entirely new forms of money in this real-time cross-border world?
You mean like digital currencies?
Cryptocurrency, precisely. Or more specifically, stablecoins. They're rapidly emerging as a potential alternative real-time settlement layer. They offer instant, borderless, and often programmable payment capabilities operating outside the traditional banking rails. And the growth projections are, frankly, staggering, expected to grow from maybe $250 billion in 2025 to $1.6 trillion by 2030.
Wow, $1.6 trillion. That's enormous. And maybe one of the most compelling examples of their real-world use is in humanitarian aid, right? Elizabeth Carpenter from Circle Impact shares how stablecoins like USDC are basically rewriting the rules for delivering relief aid, moving funds at internet speed, but with the underlying trust of the dollar. In Ukraine, they've distributed nearly $5 million in USDC to thousands of displaced families. The funds arrive in minutes. There are cash-out options available. It cuts settlement times from weeks, literally weeks, down to less than a day. That is a genuine game changer for financial inclusion, especially in crisis zones.
Absolutely. It's powerful stuff.
So finally, let's bring this all back home maybe to a core business function. Corporate treasury. If payments are suddenly moving at warp speed, 247, how does that transform how companies manage their cash, their financial risk?
It's a massive shift, a huge one. The report really highlights the many inefficiencies baked into how cash is often managed today. Traditional treasury. It often operates with these batch-driven processes, dealing with information that's already out of date by the time they see it, lagged routines. Stephen Randall from Citi, again, he emphasizes that this transition to a real-time world creates unprecedented opportunities for treasurers. They can drive real value by having deep, immediate insights into their company's entire financial ecosystem.
But it requires change.
Oh, yeah. It requires a fundamental re-engineering of treasury operations, how they consume data, how they harness it. It's a shift from being reactive to being proactive, even predictive. And that's not just nice to have, it's becoming a competitive imperative.
And it sounds like a lot of companies are still figuring out how to get there. That 2024 Citi survey found 93% of respondents expect Treasury to get materially more advanced in the next 3 to 5 years.
Right.
But over half admitted they were uncertain about the actual path to achieve that. So clearly, a new mindset is needed, new tools, probably new talent as well.
No doubt. The future of Treasury is undeniably real-time. It's going to rely heavily on high-process automation, on policy-led deterministic logic, basically, automated decisions based on preset rules, maybe using smart contracts, and AI, of course, to support faster, more informed choices. And this also means technology providers, banks, fintechs, they all have to collaborate much more closely. They need to choreograph these services together to actually enable these real-time operations for businesses. It really is a collective journey.
So as we wrap up this deep dive into 24/7 finance in an always-on world, well, it's abundantly clear that the speed of money is just fundamentally reshaping our lives, isn't it? And the global economy. From empowering gig workers with instant pay to delivering critical humanitarian aid faster than ever before, these real-time payments are unlocking really unprecedented opportunities for efficiency and for inclusion.
Yes, but as we've definitely explored, that very speed introduces significant new risks, particularly around fraud, which demands constant, cutting-edge innovation in security and real-time detection. The journey towards a truly real-time financial ecosystem, it requires continuous collaboration. Governments, financial institutions, tech providers, everyone has to work together. This is definitely a marathon, not a sprint.
So as you go about your day, maybe making a quick payment yourself or settling a bill online, just consider this. If the flow of money is increasingly working invisibly, efficiently behind the scenes, just how much more of our interconnected world, think about healthcare, supply chains, entertainment, how much more will become truly invisible and seamless in the years ahead?